The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and we got markets. A little bit of a mixed bag this morning. We have the S&Ps off by just 3 points, trading at 55.30. You got the NASDAQ 100. We're off by 64 points. NVIDIA trading lower for, I think it's the third day in a row. We'll get into NVIDIA shortly after the opening after the opening of the show. Dow up by 81 points. You see the divergence, right? You got NVIDIA carrying the weight of the NASDAQ 100 in negative territory. It was the biggest company in the world. Not so much anymore, man. It's been quite a pullback. Dow up by 81 points, though. Nearing that 40,000 mark yet again. 39,665, positive by 0.2%. The Russell, positive by 2 as well. Bitcoin, a little bit of a pullback continues. We're nearing a 59,000 handle. We just hit 60,610. Bitcoin trading at 61,100. This is a 10-day, 30-minute, I think I have up here. What do we got? Yeah, 10-day, 30-minute, and you got 72,000 on this chart, right? Put it on a daily on Bitcoin. You see the pullback right to that 382 line of the acceleration we had at the beginning of the year. Previous lows for Bitcoin back in May at about the 50% retracement, 56,000. But it's been quite a pullback from where we were just about 10 days ago. Back to a 15-minute. Crude kicks off the week at about $80. Pretty much where we chopped around for a lot of last week. We were at 81.79 on Friday before a little bit of a pullback. You jump over to gold. Continuing to run a bit. Boy, quite the pullback on Friday, but we had some severe higher prices, 23.82 down to 23.30. The interesting part about this one is it's just within the range yet again. Look at this pullback we had on June 7th down to 2300. We get another dramatic pullback on Friday 21st, the Friday we just had, down to 23.30. But all things considered, especially when you take a look at the remarkable strength of the dollar, I mean, look at the dollar. We were just at almost 106. And you got gold holding up between that 2,300 and 2,400 range. Nonetheless, the dollar this morning down a bit, 105.48. You jump over to notes and bonds. The 10-year this morning down about 2 ticks. There's your 5-minute chart. So what do we have happen on Friday? You had dramatically lower price, higher yield, okay? And that higher yield was putting to jump over a bid into the dollar, right? There's your DXY. We traded up to almost 106. That is going to weaken commodity prices that are priced in dollars. So you had higher yield, you had a stronger dollar, you had a pullback in gold prices, you also had a pullback in crude prices as well. And today we're just seeing a little bit of a mellowing out of that going on. You jump over to the VIX this morning as this market, even with NVIDIA, and there is a little bit of a spike, 1384. So now remember, the VIX is predicated on the S&P, which is interesting because the S&P is only off by about 3 points. And meanwhile, we got a spike from 13 to almost 14 in the VIX. And let's get to NVIDIA because it's quite a pullback going on right now. You got NVIDIA shares down another $3 in the pre-market. I was talking about on the program Friday that we opened Friday at about 126. That was only 24 hours removed from Thursday, when it was trading at 141, and you're going to open lower yet again today, and you're opening lower by 2.5%. And you take a look at this equity. Remember, they went 10 for 1. So what's remarkable is they went 10 for 1. And so, yes, this is only a $3 move right now. It used to be a $30 move, okay? And it used to be, this thing just traded from 141 to 123. That was a $180 move at one point when this thing was trading at 1,400, granted. Now, how many shares do they have outstanding with that? 25 billion. 24.598 to be exact. We'll round that up to 25 billion shares for simple math. You're talking about a company that's still valued over $3 trillion. They were approaching 3.5 at the highs, though, there, right? And you just gave up $18. You're talking about almost $500 billion in market cap that this company just gave up from where we were Thursday morning. If that's not volatility for you, I don't know what to tell you, man. Now, I've been talking about this A to B, C to D. It completed at 125.69, and we're now below that level, which is remarkable. You did get above that level now. Where's 125.69? There it is where my cursor is on the chart right now, about 125.69. We got there on June 6th. We got within 10 pennies to 125.59. And what is interesting, right? Look at the volume along the bottom of this chart. All right, and I'm zooming in. There's June 6th when you came within 10 pennies of that high. And look at the volume that it had as it trickled higher to almost the 141 range, right? I mentioned you had volume on June 6th on NVIDIA, and you got to follow NVIDIA, man, because this thing has been driving this market, okay? I'm not just following it for tantalizing reasons. This has been an accelerator, and just for the weighting alone, it was the biggest company in the world, bigger than Microsoft, bigger than Apple, bigger than everybody out there, okay? You did, this is a daily chart. You did 664 million shares when it hit that high at 125.59, and look at the trail off. And then you go 412, 314, 222. You trade higher on 299. You gap higher on 260. You trade higher again on 309, 288. You extend that high on 294, and then we finally get volume when you trade lower again at 517. And yeah, and then on Friday, 655. Okay, just look at the chart. Look at that volume lull that you had as this thing traded. And what's so cool from a technical standpoint is that when did the volume disappear? The volume disappeared after you completed that A to B, C to D. You hit 125.69, 59, on June 6th. You trickle higher to the tune of almost 140, 141 in the pre-market we were on Thursday. And then we've given it up. And, you know, this thing going back to 100 wouldn't be out of the woods, folks, okay? We just traded from 141 to 123. You just traded down $18 in 2 days. You're trading at 123 right now. If you're considering short-term selling in this equity at all, and I'm not telling you to go short NVIDIA, okay? Because longer term, yes, this is the driving force. It's the new, picks and shovels of the new generation, okay? But on a shorter term basis, we've seen a run like we've never seen before, okay, on an equity. I don't think we've ever seen an equity go to the, we've seen runs, right, in the market. But has any company, Tesla is the best example because they did it with Amazon at one point where they were very close to becoming, and maybe they did. Maybe somebody can help me out in the den. At one point, was Tesla the most expensive market capitalization company in the world? They may have been. But very few times does a company triple, quadruple, quintuple in value and become the biggest company in the world out of almost nowhere. Okay, this company was at $10. Yeah, it's a 15 bagger over a year and a half, 14 to be exact. Okay, a 14 bagger over a year and a half. A little bit longer than that, to be fair. Wouldn't be outlandish if this thing just came back, tested the 100 range, okay, where we started off the year. You want to be even a little bit less pessimistic. Let's just put this thing on a daily. And you're talking about from the run that we just had, folks, and I'm talking about the run that we just had that started in April. 382 brings you back to 115.63. That's still $8 lower. The 618 brings you back to 100. Wouldn't be outlandish. But boy, we got a lot of gaps on this chart, man. Maybe 95 or 94 is in the cards before that next acceleration higher. Stay tuned, folks. We're coming back. We'll talk some bonds. We'll talk some yields. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now negative by 5, trading at 55.29, just off of some of the highs that we had on Thursday of 55.88. And you see the range we're in Friday. Pretty remarkable, right? You had triple witching Friday, trillions of dollars in options expiring. And if you were out there buying volatility, you got toasted, man, because this thing was just in a range on the S&P. You zoom in on Friday. This is Friday's action. What do we have, a range of 10 or 15 S&P points, even on the close, where sometimes you get a huge acceleration, 5 to 10 points in either direction coming into the closing bell on triple witching. So it made sense to actually be the seller of volatility on that Friday. And we're just kind of chopping around. We'll back it out on a 15-minute. This morning, just kind of chopping around that same range, right? Right near the lows of Friday, 55.29, 55.28, we'll call it, on those S&Ps. Okay, so for economic data, we get PCE. We get the personal consumption expenditure on Friday. Now, what's so cool, folks, is that you got our man Larry Pesavento, and he's got his live trading going on Friday. It's always the second and fourth Friday of the month, so that's going on Friday. We get the PCE at 8:30 Friday morning. Should put a little bit of volatility in the market. And you don't need to sign up for the first class of the month when you sign up for Larry's. You're in there for a recurring monthly basis. If you sign up ahead of Friday's class, you're going to get Friday's class. And what's cool is you'll be in there for next month as well in terms of when you get in there. It's twice a month. It's $295. If you head on over to the front page of TFNN, folks, I encourage you to sign up. You gain access to the archives of the live trading classes he's done. It is a plethora of information in terms of what you gain out there. And the cool part is it's $295, but if you sign up for this month, use code LarryJune24, okay, and you can save $50 off your first month as a subscriber. You click that, you can hit subscribe, and then all you have to do, Larry June 24, we'll enter it right there, Larry June 24. You add that code, and there's your $50 off, brings it down to $245 for the month. And as I mentioned, you're going to get the live trading on Friday. You'll get at least 2 live tradings, depending on when you sign up for next month, and you gain access to the archives. So think about it. You're getting a steal in terms of you can watch all the archive webinars of Larry Live Trading, and then you get to get in there Friday for the personal consumption expenditure on 8:30 for the Fed's preferred inflation gauge. And yeah, it's a good one. He'll be geared up as always. Always enjoy those. I'm in there whenever I can. I do the program at 9 o'clock, but I jump in there right afterwards at 10 o'clock. I'm in there at 8:30 as he's beginning that program, getting ready for the day in there as well. All right, here's your 10-year. 110.15 right now. So we have the 10-year yield right now trading at 4.257. We'll call it 4.25%. Okay. Now, let's jump to the article I had pulled up here. That's not it. Excuse me. There we go. How long can high rates last? Okay, this one from Bloomberg this morning, I believe. When was it? Yesterday at 3 o'clock. I was reading it this morning. Okay, nonetheless, out over the weekend, how long can high rates last? Bond markets say maybe forever. We're in a new environment, is my opinion. Okay, do not be distracted by the recency bias of the last 10, 15 years, okay, prior to COVID, when we had interest rates near zero. We'll go back to our man Larry Pesavento again. I remember so many times when he'd be on the air saying, I don't get it, folks. Market doesn't work when you pay 0% interest rates. And he's right. If anybody knows how economics works, right, you have C for consumption and S for savings, okay? And the dynamic there in just economics, the modern, call it modern, it's basic, it's fundamental economic principles, okay, are you either consume or you save. And in theory, the only reason why people don't consume everything now is because if you save, then that savings is worth more in the future. Otherwise, why not just consume everything now? And I'm exaggerating, I'm to a bit. But the model completely breaks down when the value that you can consume now is the same amount of money if you delay that consumption and save, and then that savings only equals the same amount of consumption in the future, which is what happens when 0% interest rates are in tow. And it even is less if you factor in inflation, because the real value of that money that you forego consumption in the current term for consumption in the future actually decreases if you're not making anything on it, which you're not with 0% interest rates. So don't get caught up in the fact that we had this weird environment of 0% interest rate, and a lot of people gave the Fed a lot of grief over that time, right? Remember there was the taper tantrum, and when was it? Was it 2017, 2018? Was that when it happened? You just got to pull up the market. Was it November 2018 that the market freaked out? Yeah, it was. There it was. Right? Yeah. When you had that huge pullback, December, you made it down to 23.60, and the Fed said, "Oh, well, maybe we shouldn't be raising interest rates so quickly because the market can't handle it." And is that right? Boy, you got to recalibrate it. Yeah, it is. And then the market, and then rates decreased again, and then you came into COVID in the beginning of 2020. Man, time is just crazy. How bonkers is it, folks, that we're going on, 4.5 years since COVID? 4.5 years since COVID? That just does not make sense. Okay, so the point, though, traders are betting on a higher, longer-term funds rate for the Fed, the market, and this is where I've been talking about, okay? The market is okay with a higher interest rate right now. I mean, stock prices dictate that. I shouldn't have to tell you that, right? We're at 4.25%. We were just at 4.5 to 4.75%, and the market is on a bull run to the likes that we've almost haven't seen recently. And now COVID outstanding of that. But you're talking about a NASDAQ 100 that just doubled in price in a year and a half in a high interest rate environment, okay? The market is used to it, and you know why the market is used to it? Because the natural rate of growth in this market is much higher than what we've been used to, okay? The neutral rate shift sets up a limit to gains in treasury bonds, and that's the part I wanted to focus on here, okay? Get the idea of 0% interest rates in a healthy economy. Now, I'm not saying that if the Fed overshoots, if the economy goes into a pullback, if they need to stimulate the economy because we have a rapid deceleration in growth or whatever it is, right? If AI doesn't turn out to be the profit maker that we think it may be, etc., then yes, the Fed will go into their toolbox. They'll throw everything at the market as they usually do. You don't want to fight the Fed. They'll bring interest rates back down in a dramatic fashion. But that's not what we're talking about right now. Okay, what we're talking about right now is we're talking about the Federal Reserve cutting interest rates to avoid the need to cut to save the economy. We're not talking about them cutting to save the economy, okay? And if they're just cutting to get back to a more normal set of interest rates as opposed to the restrictive policy rate that they're in right now, then we may be much higher for longer than people expect. And we're going to finish this up on the other side of the conversation, folks. We're coming back from the opening bell. We're coming back from Monday trading. Stay tuned. We got markets mixed. We'll be right back in 3 minutes.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento on Friday, June 14th and Friday, June 28th this month for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryJune24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Sipping my morning coffee, getting ready for that opening bell, and markets open and slightly in the red for the S&Ps. We're off by 4 points. Keeping my eye on the NASDAQ 100. With NVIDIA trading lower, you get the NASDAQ 100 off by about 70 points right now, trading off 1/3%, 19,911. as I mentioned, right? You talk about a run, man. Doubling in price over a period of about a year and a half. You go from 10,500 up to 20,371 is the spike high that we got last week, and we're trading just off those price levels. You get the Dow making positive gains right now. Check out the Dow, 39,673. And so you can see the difference, right, in the NASDAQ 100 versus the Dow. And to go back for a second, the NQs, the low in October was basically the same as the low at the beginning of the year, which was 10,500, and we've almost doubled in the price. You take a look at the Dow, and the Dow was down at 28,635. You came into the beginning of 2023 at about 34,000, but even taking the lows of October, you're only talking about a gain of what, 33, 34% versus a gain of 100% in the NASDAQ 100. This market just driven by some of the biggest tech companies in the world. And with that in mind, we jumped into NVIDIA shares, and they're kind of holding the pre-market losses this morning. We hit 122.50. You bounce a bit on the open, but you're still down by about 2%. As I mentioned, 25 billion shares outstanding. 25 billion shares outstanding for NVIDIA. Boy, you talk about it, right? And they're talking about some of those other chip stocks in the den. You got Broadcom out there. They're down 1.2% for Broadcom, down about $20. They're trading at 1,640, but check out the pullback they've had from their highs, from 1883 down to 1644. What's that, 15% pullback almost for Broadcom from where it was just last week? Pretty remarkable. You jump over to Intel, not quite the case, but they're a different story. You jump over to AMD shares. Yeah, different story as well. Trading at 160, you were up at 166 as of last week. We check out some of the other companies. Now, it's interesting because you're not getting the pullback in some of the others. Microsoft, flat. So this is not just a dramatic tech pullback, and it may just be a rotation. I mean, think about it. If you're in NVIDIA and you want to be diversified, you should be rotating, man, because you just got, I mean, you put this thing back like I mentioned, you're talking about a 14-bagger over a year and a half. You know, the gains are great on the way up. But if you're not diversified, they'll be just as harsh on the way down. If this thing pulls back to 100, what it's worth, you may see a little bit of a diversification there. Because what do we have? We have NVIDIA off 2.25%. But at the same time, you got Amazon back above 190. Is that all-time highs? Yeah, pretty close. We made an all-time high when? Last month? 190, 170, and we're trading back above 190. Yeah, so there's your all-time high for Amazon shares. We're bumping up against those highs again. You jump over to Google. Google's up 0.4. So you got Amazon in the positive. You got Google in the positive. You have Apple in the positive. And you have NVIDIA down 2.2%. So pay attention, man, if you're in NVIDIA. If you're in it for the long run, even Tesla catching a little bit of a bid today, up by 1.9%. Back talking about rates. So what's interesting here, okay, is that they talk about the natural rate of growth in this economy. Okay, now we talked about last week the treasuries were on the cusp of erasing their losses for the year, which is remarkable when you think about how long we've been, for how dramatic the market has been versus where the Fed was versus where the market was, and how quickly things have changed in terms of going from 6 to 7 cuts to maybe no cuts, and now we're at probably maybe 2 cuts is where we are. Potentially limiting the central bank's ability to cut, and thus setting up a headwind for bonds, is the growing view in markets that the economy's so-called neutral rate, R star, as they call it, okay, a theoretical level of borrowing costs that neither stimulates nor slows growth, is much higher than policymakers are currently projecting, and I would add, are currently willing to admit, okay? Because they might not put that out there yet unless they're really willing to admit it and are aware of it. But when you think about how strong this economy is right now, when you look at unemployment rates, when you look at the just pure market performance, right? And this market has been driven by earnings, okay? That you may have a natural neutral rate of growth that is much higher, that the Fed needs to keep rates at a much higher rate in order to not stimulate the economy than has been prior, or what we've been used to, right, when we were near zero. The significance is that when the economy inevitably decelerates, folks, the NASDAQ 100 is not going to double in value every 18 months. Okay? I can tell you that, and that is a fact. There will be fewer rate cuts in interest rates over the next 10 years or so Let me do it again. When the economy inevitably decelerates from a double percent banger in the AI revolution, okay, there will be fewer rate cuts, and interest rates over the next 10 years or so could be higher than they were over the last 10 years. Now, that's not a fact, but that is a probability that I think is probably a healthy probability in this market. That aside from a scenario where I mentioned where the Fed needs to come in, cut rapidly to save the economy, okay, that in a healthy economy, even as it decelerates from the growth that we've been experiencing, which is pretty rapid, that you're not going to get as many cuts as we're used to because we have this recency bias of dealing with interest rates that were near zero for an extended period of time. And that is not how things normally work, okay? Forward contracts referencing the 5-year interest rate in the next 5 years, a proxy from the market view of where U.S. rates may end up, have stalled at 3.6%. While that's down from last year's 4.5, it's more than 1 full percentage point higher than the average over the past decade and above the Fed's own estimate of 2.75. The market's telling you we're going to be higher for longer. The market has been dramatically wrong. But I think in this instance, okay, the Fed saying that they're going back to 2 to 2.75%, they're not going to admit, folks, that we're going to be comfortable with an inflation rate that's 2.5 to 2.75, and they're going to settle with a natural rate of growth of 3. Okay, that's not where they're going to be. They're not going to admit that, but that may be where the market settles. Yeah, this matters because it means the market is pricing in much more elevated floor for yields, right? The practical implication is that there are potential limits for how far bonds can run. This should be a concern for investors gearing up for a kind of epic bond rally that rescued them late last year. So keep that in mind, and it's a sensible, reasonable position, man. This market is on fire right now with bonds at 4.5%. And if you think the Fed is going to rush to crush the cost of capital back down to 2.75% when things are going the way they're going, I just don't see that the picture. And yes, inflation is still a persistent problem in this market. But on a longer-term basis, and I'm going to put the 30-year up here, okay, because this one really goes back. It's easy to think, and this is where, bond rates are going to accelerate higher. Lower. As in bond prices are going to accelerate higher. Because if you look at this chart, any time past 2008, we are at basically record low price in the 30-year. If you look at this chart for the 30-year, anytime prior to 2008, 30-year rates are basically at a level that we haven't seen, as in we are at higher price and we're at the low yields that we've seen. Anytime prior than 2008 on the 30-year bond, folks, okay, we're pushing all-time highs. Remember that when you think that there's nowhere to go but higher price and lower yield, because the market did just fine prior to 2008. Look at that chart. Don't get caught up in this last 10 to 15 years. All right, we'll come back. We'll talk some different equities. Don't go away.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps holding kind of the pre-market pullback. You're negative by about 6 points right now, 55.27. You see the action there, right? This is a 5-minute chart. 9:30 we open. We trade up a bit, a little bit of a pullback there. And right now we're trading off by just 7 points. NASDAQ 100, NVIDIA driving the market off 0.4%, 19,900 on the dot right now. Dow in positive territory with the Russell as well, and NVIDIA continuing to drop off by 3.4%. And as I mentioned, 25 billion shares, about 24.5 to be exact. And so we're off by almost $4. That's 100 billion, and I think you're under 3 now. Oh, they're still holding it. 3.02 trillion. Pretty remarkable, man. You jump over to Apple. Apple right now sitting at 3.188, and you jump over to Microsoft, they're slightly in the red, at 3.33 as the largest company in the world. Pretty remarkable. Now, it's interesting here. We talked about this last week, right? The XLK, okay, is the Select Spider Technology ETF, okay? And what's interesting here is, and I talked about this last week, this is changing. When does this change? Maybe they have to upload this. I think this has already changed, because right now they have. I think this might be erroneous. Does anybody know in the den if this is already, the weighting has already changed for the XLK? Because I was talking about last week that the weightings have changed, and it used to be Microsoft, Apple, and then NVIDIA at 5%, but that has now changed, and it's now going to be Microsoft and NVIDIA are going to be the ones at about 21%, and Apple, because on the date of the rebalancing, which I think is a week ago removed from last Friday, NVIDIA and Microsoft actually had higher market capitalization rates versus Apple. And so what's going to happen is that you have these two equities, being Microsoft and NVIDIA, going to be driving the XLK, and Apple only has the 5% weighting. And the reason why they all can't have a similar weighting, because they're all pretty much around $3 trillion market cap, is because of diversification rules, which limit how much of an ETF equities that are greater than 5% can combine to equal. So you can't have 3 equities be over 50% of the fund. You can't have, I think what it is you can't have any equity with over 5% combining with all the other equities to equal it. I'll pull that up at the next break, though. But nonetheless, it is remarkable when you look at the XLK that you are trading 2 stocks. You used to be trading Microsoft and Apple, and whenever this changes, I'm going to pull it up at the break, see if I can find that date, you're now going to be trading Microsoft and NVIDIA at 22%, and meanwhile, Apple is going to be the one that's going to be at 5%. Pretty remarkable when you put it in that comparison, right? Nonetheless, you get the XLK off 1.4% today as you have NVIDIA pulling back. All right, what else are we talking about? We'll keep the theme on rates, and I found this one interesting. Yahoo Finance, not exactly the best journalism in finance out there, but it is interesting when you start to think about how you afford a home, okay? And what they're talking about here is Zillow, somebody from Zillow, saying that, and it's double-edged here, because what they say is, and you know, this is clickbait to a certain degree, because boy, I clicked on it, I said, who's going to put down 35%? Are they talking about that you're going to need 35% to qualify for a loan? Well, maybe if you're making a median income to afford the payments for that house. But my next question goes, who has 35% to put down on a loan if you have a median yearly income and you're trying to afford a home at this time, right? Say goodbye to 20% down payment. Zillow says you'll need to put down 35% or almost $128,000 to afford a typical home. And where they're going from that is that homes are 45% higher, mortgage payments are roughly 115% higher from where they were just a few years ago. Down payments have always been important, but in the current market, where interest rates remain high and volatile and home values are stable or rising, boosting the amount you put down can make the difference between a home that's affordable and one that's not. Well, that's always been the case, folks. If you can put down $125,000 at closing, that's going to make the difference in your payment, okay? But what they go from is the analysis is looking at major metropolitan areas, found home buyers earning the median income needed to put down 35.4%, which equals about $128,000 to comfortably afford payments on the typical home in America. That is a staggering statistic. Now, what happens if the Feds drop interest rates a bit? Home prices may go up, though, if they do, right? Very interesting. We'll finish this conversation up. We'll take a look at some other equities, folks, and we'll take a look at some other things we have going on. Stay tuned. We'll be right back to finish up the program. Don't go away.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Check out that S&P resurging to high. Green prices, 55.39. You talk about a pop, man. We just popped about 14 points. You get the Dow up 223, 39,810 right now. You got the Russell up 0.9%. Check out the acceleration we got going on, man. NASDAQ still slightly in the red, down by about 50 points. We check in on NVIDIA, still down about 3%, 122.79. And it is interesting that NVIDIA, I was trying to get the exact date. I think it might have been Friday. In terms of the XLK, the rebalancing that took place, and a couple different articles talking about maybe it goes on Friday, if anybody in the den had it, because they're still showing, whether you pull up Yahoo Finance, whether you pull up Thinkorswim, that the XLK right now has Microsoft and Apple as the top 2 weightings. NVIDIA is sitting at 5.4% right now, but that is going to change, and I think that might have taken place on Friday. Would have been the day that took place. that rebalancing took place. Nonetheless, you have the pullback going on in NVIDIA. That's putting some weight into the NASDAQ 100. We check around to some of the other tech companies. Amazon shares basically flat on the session. Microsoft flat as well. We trade lower, we trade higher. A little bit of volatility. Apple shares this morning positive by 0.4% after trading up to 218 last week. We're down to 208 this week. We check on fan favorite Tesla. Gets us a little bit of a pop up to the highs of last week, 187.85 for Tesla shares. We check in on the yields, which is dollars going next. Yields are flat right now at about 4.25%. We check in on the dollar. Ooh, look at that pullback, man. 105.43. The dollar with quite a pullback, even from where we were just as we were getting ready for the program. We were at 105.56. You're down at 105.42. We check in on gold. Whoops. GC. Yeah, that's going to put a little bit of a lift in gold. Gold up by $10 to $23.41. Nothing compared to the pullback you had on Friday, though. And we close it out with crude. Crude right now, $80.99 for the price of crude. All right, folks, thanks so much for kicking your trading week off right here with me at TFNN. Stay tuned. We got our man Basil Chapman coming up next. Don't forget about Larry, live trading going on Friday, right as we get that personal consumption expenditure Friday morning as well. Stay tuned, folks. Basil's coming up with the Tiger Technicians Hour coming up next live. Have a great Monday. Talk to you tomorrow, folks. Have a great one.